Hi guys, today we are going to be talking about one of the most important and I guess basic topics, but necessary topics in regards to Forex education, Forex trading, which is support. We'll be going over what is support, how you determine it, and why it's actually important, because believe you me, if you don't understand what support is within the Forex environment, you will not be understand how experts are talking about it. You won't understand pivotal points, you won't understand excellent price action within the market. A lot is hinging around what is support. And more importantly, when we go into it later, another topic we'll be discussing, resistance. So we'll be discussing support and resistance together, which will make up so many different trading styles and variations that you can use to hopefully, and I'm sure you will, profitably trade in the future. So let's get into it, right? So first of all, what is support? So if we look over here on this area, I'm just going to draw out this line. It's called a trend line. If we look at it here, trend line, right? And I've drawn it at the bottom because support is much like having friends or family. You know, you're going through a rough time, even when you're going through a good time, normal time, they're always there to support you. They prop you up, they help you when you're down, and so on and so forth. Well, it's the exact same principles within the foreign exchange. It's the exact same principles. So if we have a look over here, in fact, I'll show you, there's one area, two areas, three areas of support right over here. So support is basically wherever the market is finding some level where it then bounces up. So we can see the market comes up, it drops down. What happens after it hits this? It comes up, bounces down. Yes, it slightly breaks through, but then we shoot up again. Come down, don't even touch the line, come up again, we're coming down, and now we're touching it here. And we're about to bounce off again. And we can even see, for example, if I just delete this, obviously I've been trading, different points as well. We can even have a going down example, so a bearish example. Again, it comes down, hits this line, yes it breaks through, but look, it bounces off it. Bounces off it again, comes down, bounces off it, comes down, bounces off it again. What happens after this last bounce? Shoots up. Right? So that is what support is doing within the market. It's propping up the market. It's allowing the market to continually bounce off it, right? So why is that important for you to understand this? It's all well and good saying, okay, that's what support is. Just basically the market bouncing off of a price point level. Multiple price point levels, and if we draw out a trend line here, it's basically all I'm doing is linking all the bottoms together. From this bottom to this bottom, this bottom, this bottom here. Notice I don't go all the way out. I could, because that wick's touching it, that body's touching it, that wick's touching it, but I would then start to miss this area here. So this would probably be the best way to draw it, because now all the bottoms are touching it and none of them are breaking through. Hence why I drew it here. There's a little breakthrough, but I'm not doing it like here, where this bottom's touching it, this bottom's touching it, this bottom. If I do it here, it just makes a little bit more sense because now it's not breaking through as often. If I did it like here, you could see there's a massive breakthrough here and we're breaking through again. Doesn't really make sense. So even if we go to another example over here, how would I draw it? Like this. I wouldn't go here because it's broken through and we're still going up. And if I just extend this line, it looks something like that, so it doesn't work. If I did this line, we can see we come up, we keep on going, and look, these lines that we drew out before start to intersect. That's when it breaks through here, and then we find support again around here. Do you see how I'm hitting this bottom doesn't come down until here, and then look, we find another support line. So that's how you draw it. You're connecting all the bottoms together without trying to have too many breakouts. And again, it would be the exact same if I drew it out something like this. That makes sense, because if we went all the way down to the bottom, look, it matches up again. How coincidental. So that's the way that you draw it, and obviously we now know that support is propping up the market at different price levels. And all you have to do is just select the trend line option and just match all the bottoms without having breakthroughs. That's how you draw it, right? That's how you draw it. So determining it, if someone says, how do you determine where support is in the market? They're just asking you, where are you drawing your trend lines? How are you actually finding this out? And we've actually just shown here, this example, and this example, that it's really straightforward and simple to how to determine, therefore how to draw, where the trend lines are in the market. Now I know I touched on this before, but why is this important for you? Well, say you are a trader, right? And you want to find out where you can hop into the market, right? You want a really good place to hop into a market for a buy. Well, if I was buying, wouldn't it make a lot of sense for me with a support line to think, oh, well, if it's hitting this support line, it's bouncing off it, I might go in for a buy. If you hopped in here, you'd pull out here. That would be a win. You might say, I'm going to hop in for a buy down here because I think it's going to go up. Oh, look, that happened as well. So you could do it on the pullbacks. And it's the exact same for down here. Oh, it's been coming up, it's hit this line. Oh, it's going up again. I'm going to go in for a buy. Massive buy. That's fantastic. I don't know if we have that other example over here. In fact, we do. Again, it comes up, comes down, comes up, comes down. I'm going to go in for a buy. Perfect, comes all the way to here. Well, I think it's going to bounce off that support line because Alex has just told me that that's what happens when we're drawing out all these support lines, going for a buy. It shoots up. So support lines give you really good examples of where to hop in within the market. Where to hop in and how to basically, how should I put this? How to find really good entry areas for your trading later, right? So let's go over and sum it up. That was a really quick example, a couple of examples, but what we're going to do is quickly sum it all up so you can actually use it in a live trading example. How I, as a trader, would go through this here. So let's go into a different pair, right? Let's go in USD CAD. And we'll go to current price action. Well, we can see right here, if I line up all the bottoms, that works out really well because we have one bottom here, one bottom here, one bottom, another bottom, and it's basically coming down here, right? So we know that this is where we are supposed to draw the trend lines. Now, why is that? Because we are matching up the bottoms. 1, 2, 3, 4, 5. And none of them are breaking through. It's absolutely perfect if it touches the line. If one of these wicks come through, for example, that's completely fine. There are exceptions. As I've said in other lessons, Forex is never going to be a game of perfection. So you just have to be able to draw it as best you can. Draw out your support lines to determine where the support is. If it's not breaking through, sorry, let me get rid of this. If it's not breaking through, it's valid. That's the only thing I'll say about that. So we've determined where it is because all the bottoms aren't breaking through. It's all touching on this line. Now, we go back to thinking, well, what do support lines do? What is their basis, right? They prop up the market. They make price action do something like this. So say if there was a trend line over here, this is our trend line. Market is probably going to do something like this. Come up, come down, come up, come down, come up, come down, and so on and so forth. That is what we're expecting. We can't see it exactly here, but it might jump off again. What we can see is from here, comes down, comes up, comes down, comes up, comes down, up, small ups, and we might see something like this. Again, Forex is never a game of perfection, so we cannot always think about how this is going to go down, right? Sometimes it will look a little bit different to how normal price action would go about. So we know it's going to bounce off these support lines. So we've determined what support is. We've already explained it. So we now know what we think is going to happen in the market. So how would we go about profitizing off this, if that's a word, being able to be profitable off trading these support lines? Well, it's really simple. If I see it come down and hit this line, I'll hop into the market. I'll put my stop loss somewhere over here. Now, this is just an example, right? Just because I'm drawing exactly like this does not mean that this is necessarily how it's going to go down. I'm just giving you an example. Quick disclaimer there. So it hits this line. We've got our stop loss somewhere down here. And then we say, okay, we determine that for some reason, our take profit's going to be here. That's 2.93%. We wait until it comes down over here and touches this line again. We wait and think it's going to come to the same spot. It hasn't done that yet, but say we only wanted 1%. We only want to just get 1%. That's fine. Say we only wanted 2%, which is here. That's fine as well. Say you went in and you waited for that 3%, which is somewhere over here. It could come down again and it could shoot up. So that's how we are going to be using it. So again, I'm going to go over one final example just to make sure that we can have a look at what's going on. Say we just go into replay mode. Say this is current price action, right? I see that the market's doing this. Now again, I said that it can wick through. I just didn't want the candlestick to break through and close beneath. So we can see, so I should probably do something like that. We can see this. It's come up, it's nearly touched this line. As I've said in other lessons, Forex is not game perfection. So if it's coming down and it's really close, what we can see here, only 9 pips away. If it's closer than 10 pips, I always consider that a valid touch. That's just me personally, because again, sometimes you'll never get an appropriate retouch. And that's going to be annoying, but that's what happens sometimes. Now let's see what happens with the market conditions and what they actually do, right? So they continue to go all the way up. So what we can see from here is this area right now. It's come up, comes down, comes up, comes down, comes up. And then we actually get, even if I go back and do this, different support line. Because now I can see this. So say this was what we were currently looking at, current price action. I could see it's come all the way down here. I could wait for it to maybe come down. Obviously it goes all the way up again. And it goes in, but say it did come down to here, you would just hop in on this line that you've drawn out. I would put my stop loss right underneath where these wicks are, and then I'd say you'd go for your 2% or whatever it is. That is how you would be using support in a live trading environment. You're looking at what's going on, you're going onto your pairs, you're going to Euro JPY, even if it was something like this, where we can see that this support line has been activated since the 4th of November. It's now currently the 8th. It comes up, comes down, touches it, comes up, comes down, touches it. As we are speaking, I could put in, theoretically, a live trade right now, do something like this, and then say, hey, I want to aim for 3%. That's what I would be looking at right now. Because we've got this line, we've got the retouch, we know when it comes down to the support line, what happens? It shoots up, comes down onto this line, shoots up again. And it all started from here, came up, shot down, came all the way up here. Let's even see how far away this one is. Unfortunately, that's a bit of a distance, that's 33 pips straight down, but obviously we get closer ones over here. Even this one, when it came really close, we might even have something right here. It's 11 pips, that doesn't work, but you get what I mean, guys. So quick recap, support pushes the market up. We are defining support by linking all the bottoms together. And we can tell that it is because of the definition. It's propping up the market, it shoots it up. Are these lines touching, is the price action touching these lines and shooting up? Yeah, in one place here, two places, three places, potentially four, well, this would be support. And it's identified, drawn out, we determine it by using this trend line, linking all the bottoms together. That's how we've determined it. What do we do with that information? We hop into the market, because I know that theoretically, when it hits this line, it's going to continue to push it up. And then I can hop in and I can go on from there and see if I'm going to make my 3%. Anyway, guys, that is it for this lesson. I hope it has been educational for you. Again, if you've got any questions, I'm sure we'll be able to help. So leave a comment, send an email, whatever it is that you prefer to talk to us through, and we can get back to you. But yeah, use this. If you have any questions, message us, look over it again, take notes. It's going to take a while to set it in, but until the next lesson, guys, have a wonderful day, and I'll see you in the next one.